Semiconductor stocks have powered much of the recent market rally, both in Korea and overseas. Now they're driving the sell-off, raising the question of whether this is just a temporary correction or the start of a downturn in the chip cycle. For more, we turn to our Kim Junong in the studio. Welcome, Junong.
Great to be here, Dami.
So, Junong, let's start with today's market. Today's trading really showed just how volatile the market has become, didn't it?
It was actually. The KOSPI today closed up 0.6%. At around 7,200, but swung between gains and losses several times throughout the session. I asked an economist what drove today's moves, but he couldn't point to any single factor, which highlights just how uncertain the market is these days. After hitting a record close above the 9,100 mark, the KOSPI has remained as highly volatile. Circuit breakers have already been triggered 6 times this year, with investor fear reaching its highest level since the 2008 financial crisis. Behind much of the turbulence are sharp swings in semiconductor shares, with Samsung Electronics and SK hynix accounting for more than half of the KOSPI's market value. Movements in the sector can have an outsized impact on the broader market. Analysts also point to single stock leveraged ETFs as another factor, amplifying the volatility.
Since late May, single stock leveraged ETFs have helped fuel an overheated concentration in semiconductor stocks, not only in Korea, but across global markets.
You know, Junong, semiconductor stocks have been on a remarkable rally, I must say, but the question is, why the sudden reverse?
Well, that's actually what surprised many investors this week. So this week was expected to boost sentiment with major chipmaker events scheduled throughout the week. But the market reacted very differently. Take Samsung Electronics, for example. The company on Tuesday reported a record quarterly operating profit of around $58 billion. Yet its shares still fell more than 6% that day. SK hynix has also come under heavy selling pressure this month. Analysts say the biggest trigger is uncertainty over the memory chip cycle. Until now, the sector's strong performance has been driven by expectations of continued AI infrastructure spending from global tech giants. But rising AI infrastructure costs are raising fears that spending could slow down. That has put pressure on related stocks.
U.S. cloud company Oracle recently warned in its annual report that power and cooling constraints could delay data center construction. Analysts say such delays could weaken semiconductor demand and add to market volatility.
Those concerns are having a bigger impact on Korea's stock market, where chip stocks make up a large share of total market value.
So what should investors keep an eye on from here? I mean, more importantly, how can we tell if this is just a temporary pullback or, like I said, the beginning of a, downturn in the entire chip cycle?
Well, it's still too early to tell. The answer is likely to come from a series of key AI and semiconductor-related events scheduled through the rest of this month. Here's what's coming up. Taiwan's chip giant TSMC is due to report earnings in mid-July. Later in the month, SK hynix and global AI giants including Google, Microsoft, and Meta will also release their results. But before that, American Depository Receipts, or ADRs, for SK hynix are set to begin trading on the NASDAQ on Friday. Bloomberg says the offering drew strong global demand, with orders for more than 7 times the number of shares available. SK Group chairman Choi Tae-won is also set to ring the opening bell at NASDAQ, where he is expected to highlight the company's AI chip strategy. The trading debut will give SK hynix access to a broader pool of U.S. investors and serve as an early barometer of sentiment toward Korea's chip sector.
The ADR listing is a positive step. It broadens access for global investors and could reduce foreign selling pressure in Korea, which will give SK hynix a better chance to trade closer to its fair value.
Investors will be watching not only the earnings themselves, but also the AI spending plans that big tech firms unveil alongside their results. Those plans could provide the clearest signal yet on whether the semiconductor boom still has room to run or is beginning to lose momentum.
If big tech signals that AI investment will continue through next year and beyond, semiconductor stocks could find stability again. But if they warn of delays or express skepticism about data center projects, the sector could come under deeper selling pressure.
More answers are expected by the end of the month, but until then, investors should brace for continued volatility.
Right, which is why we need to keep an eye on the upcoming market events. Chun-Hong, thanks for coming in tonight.
Thank you.